So we have here Mariana, who is back from Crypto.com. Thank you very much for being a part of this show and supporting it. We have Mr. Kaj Burkhardi. Did I say that right? Mr. Kaj Burkhardi, who is going to be the moderator of the panel. And I have Johann Bowman, who is going to be a panelist as well. And I have Mr. AJIT Tripathi, who is going to be a panelist. And who else we got? DENIZ OMER, who is going to be a panelist as well. So we are going to be talking about the institutional adoption of decentralized finance. A very, very interesting topic when it comes to decentralized finance. Everybody is quite excited, and everybody is looking exactly as to how this is really changing and taking the world by storm. We know that in Africa and around the world, 2017 is kind of marked the year where people really get awakened away from software engineering to really understanding or hearing the buzzwords, Bitcoin and cryptocurrencies and whatnot, what that entailed. But 2 years later, here we are talking about DeFi, and now we even coming up with DeFi and now DeFi. It's almost as if all these buzzwords are just springing up around the world. But you know what? We are here to have a great conversation, and what a great panel for the audience as well. So,
hello everyone, and great that everyone is here. I would like to welcome especially our panel speakers. I'm just the moderator, so would like to ask everyone to very, very briefly introduce themselves. Mariana, do you want to start?
Sure thing. Hi everybody, it's a real pleasure to be back on stage today. So I'm MARIANA GOSPODINOVA, and I head the European operations of Crypto.com. I have previously headed the European operations of Binance, and traditionally I come from a more traditional financial background, at about 17 years in the financial services industry.
Great. DENIZ, do you want to go next?
Yeah, hi everyone, my name is DENIZ. I worked in finance for 10 years before coming across Ethereum in 2016. And it was love at first sight, and I've been involved in the Ethereum space for the last 5 years, and I love every bit of it.
Super. Johann, let's go.
Good morning and good afternoon, everyone. My name is Johann BORNMAN. My background is also in traditional finance. I helped to start and build an investment business in London for 6 years. Realized that software is eating the world in 2013, 2014. And so I moved into a robo-advisor where I built their investment engine before building my own fintech business. And today lead Metamask institutional for ConsenSys. And this is essentially a Metamask version that aims to solve the entire transaction flow process and needs for institutional investors.
Right. And AJIT.
So yeah, my background is in capital markets tech, front, middle, and back office. Did a bunch of regulatory change work for 4 major investment banks, then went on to build the blockchain business for PwC, then the fintech business for ConsenSys, and have spent the last 5 years at the intersection of blockchain, crypto, and financial services institutions. Now driving the growth of DeFi in the institutional space for Aave.
Very good. Do you want to just go next for the first question, which is how would you define DeFi?
Yeah, so there are two parts. Decentralization is technical and economic. So when we say technical decentralization, that means that applications in DeFi are deployed on public blockchains, permissionless blockchains that no one in particular controls, right? So it's not controlled by JP Morgan or Goldman or another bank. So all the applications in DeFi are essentially deployed on public blockchains. And then there is economic decentralization, as in it's perfectly possible to have a DeFi protocol that's controlled by one guy or 5 guys, and that's not very decentralized. So true decentralization is when the economic power for decision making in decentralized finance protocols is controlled by a wide array of token holders who essentially vote on these proposals. So if you look at Aave, for example, then Aave is deployed on the public, blockchain, and it's all the decisions are made by token holders who vote on proposals and make decisions. And then obviously these are financial applications that provide the backend infrastructure for the future of fintech.
Great. Mariana, I would like to ask you the next question about the opportunities for institutional but also non-institutional or non-financial institutions around DeFi. So are they adopting that already, or are we seeing still a slow trend?
Well, Kash, reportedly they are, although the trend, I would say, is growing. And why is that? So when I think about institutions that are adopting DeFi or potentially could be adopting DeFi, I always split them in my mind in two categories. And these would be, the regular commerce and more traditional businesses or SMEs, smaller companies that may not have, let's say, such a good access to lending, in particular, at least at sensible pricing anyway, and don't have any requirements on how to invest their own funds. And then I look at the fintechs and the financial services companies that have already heavily invested, let's say, in Bitcoin, not necessarily in DeFi assets. But why do I think there is a huge opportunity in DeFi for the fintechs and financial services where I come from, for example? There has been a really big pain point in the financial services industry, and I think in banking overall, with the way that international settlements have been done so far. And predominantly, if you look at international settlements done over the SWIFT network, you're looking at a very archaic, very slow, very heavy platform that just exchanges those empty something messages. And these messages have this rigid verification system that goes alongside with them. And the way that DeFi can really change and actually completely turn around this industry is by something that I actually really admire. And it's something that I first heard Vitalik Buterin speak about, which is the trustless and the zero knowledge and permissionless protocol that would actually deliver a message or a transaction from end to end by delivering verification and proof of this transaction without having the inherent knowledge of the pertaining details of that transaction, the person who is doing it or the address. They just deliver the verification that that transaction has happened on the network and it belongs to whoever has sent it, and it should go to whoever the recipient should be. So just by using that protocol, the DeFi protocol, I think the financial services industry could benefit largely from DeFi technology. Whether or not they're willing to adopt it and whether banks would actually adopt such a technology always depends on the regulatory framework. And as we know, this at the moment does not exist. And moreover, it actually is something that regulators would oppose to, and they're trying to look into in a very negative way so far. But hopefully, once institutions open up to using DeFi technology to transfer transactions, this would have a whole macroeconomic level of change to the financial services industry. And then when I look at the typical commerce companies, DeFi really gives them a great opportunity to first, if they own Bitcoin, let's say, they can reinvest that Bitcoin by ERC20 tokens that currently exist on the DeFi network. Let's say wrapped Bitcoin. They can use their Bitcoin and put it to work. They can lend it to other participants in the DeFi network and gain some benefits from it. On the other hand, smaller companies can also benefit from the lending that they can, or the borrowing that they can do on DeFi protocols. So plenty of opportunities. Whether or not companies would want to enter that market obviously would depend on whether or not they have the professional capacity to understand DeFi to start with, and of course the ability to invest their own funds into riskier assets.
Yeah. Great. Johann, we have an echo here. Mariana, can you? Yeah, super. Johann, from a ConsenSys perspective, right? You're kind of a consulting company, kind of a product company. How do you see that one? How much interest is there from the institutional investors already in using Metamask and other protocols or products in that respect?
Yeah, thank you, Kaj. It's a very good question. I think if you look at the adoption cycle of DeFi, you've obviously seen early adoption within, super users and DeFi degens. And sharp off the back of that, we've seen very particular institutional investors step into the space. Not surprising, obviously, given the high returns that it offers. With high growth, high returns, capital allocators are obviously going to, find ways to move into the space. Within institutional investors, you can absolutely segment the market. you have seen, I think, funds, and particularly crypto funds, have more freedom and liberty to allocate capital within the space. But then also within that market, you have to be very careful understanding there is very, very much of a large cap space, a mid cap space, and then the small cap space. And I think it's more the mid caps and the small caps that have a bit more freedom in terms of their compliance requirements, their AML, KYC reporting, that they can be a bit more aggressive in their capital allocation. And so I think you've seen very strong adoption within that space. If you move to sort of larger institutions, crypto funds and family offices with, a few billion in asset under management, I think they're still trying to figure that space out, to be honest with you, because there are a lot of AML and KYC requirements that they need to think through. And so, you're not seeing the same quantitative strategies, CTA strategies in DeFi as you see within CeFi. But I think it's only a matter of space. And most of the funds I've spoken with are really thinking through this problem at the moment, both from a, what are we saying to our LPs when we're raising in a new fund? How are we thinking about our operational infrastructure, risk management, compliance? And then very importantly, I think we're going to be seeing, especially this year and next year, larger funds move into the space. I think 2020 was obviously, a big year for DeFi, but it was also a big year for traditional fund management adopting Bitcoin. We saw the likes of Ruffer and, really famous investment firms allocating capital to Bitcoin. And I think you'll see the exact same story happen in DeFi in the next 2 years or so. So that's essentially the adoption curve you're seeing at the moment.
Great. Denis, what do you think is necessary from a regulator perspective in order to generate much more volume on the DeFi side in a proper way and less risky way, at least that you can tackle then?
I mean, that's so hard to kind of answer because we're trying to, there's a whole segment that thinks there shouldn't be any regulation. That's the point of it. Like the contracts assume you assume the liability, full liability of whatever happens. And that's like a novel approach. And, you guys mentioned all the advantages of that. But on the other hand, you do need to have some kind of protections as well, right? And I think at a very basic level, anything that applies to the conventional space still applies to the crypto space. If you're doing something illegal on crypto, it's still kind of illegal. Just because it's on a blockchain doesn't mean somehow that laws don't apply to it, right? But then there are going to be questions asked of projects, like of Ethereum itself, of, when a regulator comes and asks for something, does it happen or doesn't it happen? There's a whole question about decentralization. So I'm not exactly sure how it's going to play out over the next few years. And so far we've seen regulators have a hands-off kind of approach, just not to trip up the technology, just to let it go with the flow and then see maybe how they can kind of target specific areas where it might be obvious that there are huge issues. But yeah, right now it is like the Wild West, with rug pulls and everything. And I don't know how that fits into institutional investment kind of mentality. I don't know how we can square it too, but it's going to be interesting to see how it plays out. Yeah,
I can imagine. So many of the Ethereum of the DeFi platforms are currently based on Ethereum. AJIT, do you see any other new platform also upcoming which could really be a competitor to Ethereum?
Yeah, definitely. So first of all, I'm obviously very, very close to Ethereum, and since 2015, so I do have a preference personally. But it's clear that we live in a multi-chain world now. If you look at so at Aave we are exploring multiple platforms today. As of now, Ethereum has the most developer traction. Ethereum has the most developed developer tool set. Ethereum is also very secure because of the sheer amount of investment in the mining capacity, and is kind of going in the right direction with both layer 2 protocols and migration to proof of stake. So I think Ethereum is still the best ecosystem for decentralized finance across layer 1 and layer 2s. And but at the same time, other platforms have evolved. If you look at Terra is doing well. Flow is doing well on NFTs. Polkadot has a thriving ecosystem. There's a long list. Binance Smart Chain has had its own traction with certain types of applications. Not to I mean, none of this is, is a recommendation on anything, but what I'm saying is that there is, all the EVM compatible chains have had a lot of traction. And then on the consensus protocol layer, for example, Tendermint has had a lot of traction, right? So EVM and Tendermint has evolved as a pretty good combination. And at the end of the day, we are still very, very early. I mean, all of DeFi is 60 billion in market cap and similar assets under management. US equities alone are, at least 15 trillion. I think that number is already stale. So we're still in 1993, 1994 when it comes to DeFi, if you were to compare with the internet. And that's why this space is so exciting, right? And then it goes back to the previous question about regulation, which is regulators realize that they need to do something different, right? I mean, just creating more and more rules to fix previously broken rules. We saw that with with this whole GME stock fiasco. We saw that with Wirecard. This just creating more rules hasn't worked, and this technology offers a better way. And it's so early, sure, there are risks, but those risks can be managed, right? With the same principles-based approach that's kind of worked for some jurisdictions more than others. So, yeah, regulators like Hester Peirce and others are very, very favorable to this approach. And, we have a lot of work to do in managing these risks, but we're doing that, right? But in terms of tech, no blockchain is the final answer on blockchains. It's still very early.
Mariana, from Crypto.com perspective, how do you see that one, and how do you deal with the regulation question as well?
Well, from a DeFi perspective, there is no regulation to deal with, right? The only regulation that we have to deal with right now is in the centralized space. And as you know, we actually are dealing with it quite well, because we're one of the first companies that got a VFA license in Malta, where I'm based. Then, on the other hand, we're just staying on top of the news that come from regulators, and our chief compliance officer is in constant communication with the SEC and with other regulators to stay abreast of any news or any trends that may come over, because with like any other institution in this space, we are completely aware of the fact that the wrong approach from regulators could actually halt a lot of the legit efforts of many companies in the space.
Great. I just look at the chat, and there are some questions for AJIT. What about Cardano on the DeFi space? Because you mentioned a couple of others, but not Cardano. I actually see Aave is really keen on getting your perspective on that one.
I choose not to comment on technologies that don't currently support smart contracts, because all of DeFi relies on smart contract technology. When certain other platforms start supporting smart contracts, then and if they manage to evolve a thriving developer ecosystem, then that might be a different answer. But at this point, DeFi obviously relies on smart contract technology, and EVM based chains are winning. So we'll see.
Okay, got it. Johann, maybe one question for you with regards to the connection between traditional banking on the one hand side and DeFi on the other. How do you see that piece in terms of potentially connecting the two worlds?
Yeah, really interesting question. So I think, as I pointed out before, given the phenomenal returns within DeFi and crypto funds stepping into the space, you are definitely seeing large financial institutions thinking about DeFi generally. And this is, exchanges, it's the Vanguards, Fidelity of the world. How do they participate in this space, essentially? I think in terms of that connection piece that you're talking about, one can think about it in two different ways. And one is potentially top down and the other one is bottom up. And I think, to some degree, you've already seen blockchain make its way through, or in the process of making its way through, enterprise architecture within financial services. And so I think that's very much sort of a top-down adoption, where you're seeing superior digital architecture making its way into financial services and institutions generally. Specifically within DeFi, though, I suspect that the adoption will be similar to what you've seen in FinTech 2.0. And this is very much kind of the bottom-up view that I mentioned, where you're seeing most likely innovative players within fintech too. So the neobanks potentially, players that have rethought and re-engineered, digital finance and applications adopt DeFi within their services. And you're kind of already seeing this. So you're seeing, PayPal rethink and move very aggressively into crypto. You're seeing the same thing with players like Square and Stripe. And so I think a lot of these sort of B2C fintech players will most likely be the bridge into DeFi from the consumer perspective. And then there's always a kind of a race, right? If you're talking about macro and micro, is it a view of, will the micro players get scale, or, will the big players become software defined? And so I think invariably between those two different angles, they'll potentially meet in the middle. And that's most likely where you will see this bridge happen, essentially.
Great. Deniz, do you see a similar, much more link, if at all, starting more on the neo or challenger banks instead of, the incumbents are staying away from it?
What do you mean, incumbent banks staying away from blockchain? Or?
Yep. No, from the DeFi space, exactly. Incumbent banks, exactly the point of Johann, right? The closest starting point is probably with the neobanks, the Stripe, PayPal, like of companies. What about the big ones, like the JP Morgan, NHSBC, or other really large players of today?
I think they're probably going to be the last to be kind of joining this movement, although they are aware that this instant settlement is so far much better than what they've been doing for the last 100 years with all these like T+3, and it's so clunky. They know there's something, very powerful here, but whether they actually adopt DeFi as it is today, or DeFi in 5 years' time, which is much more mature, like the infrastructure pieces are much more clear, then I can see them very easily wanting to adopt that one, like kind of pushing that. But then again, they will always be protecting their own interests first. So I'm not sure how it might play out, but like I can see a future where everyone is like, even if not directly using the blockchain, there is a blockchain component to all the settlement layers and all the execution layer on top of that. Even if it's not like 100% blockchain, it's like a mishmash, let's say.
That's a Kaz, if I may step in here, right? Because this is kind of what I do every day. So institutions in crypto come in a wide. There is a spectrum, right? And that spectrum is along how regulated they are. So the most regulated institutions are savings accounts, right? People who and mortgages that offer services to retail customers and therefore require very strict suitability requirements, right? So where the consumers that require more regulatory protections are served by banks. And so the banks are obviously the most regulated entities. Then you have capital markets institutions, right? Like Goldman Sachs, JP Morgan, trading floors, all that stuff. And then you have asset managers, and at the nearest early adopter end of institutional markets, you have crypto funds, right? 5 guys in a garage, all the way to actually professionally run crypto funds with owned by hedge funds. So the adoption curve goes from less regulated end to the most regulated end. And what's really happening today, if you look at what we're doing, so there are crypto wallets with fiat on ramps that have integrated with Aave, Nash, and Everest, right? So they are offering earn related services which offer a yield to retail customers while clearly disclosing that this is not a savings account, right? This is a way to earn crypto yields, and that sort of disclosure and transparency is absolutely critical to DeFi. Now, also crypto funds, there isn't a day when I don't get called by some family office because it's their own money and they have the right to take risks, whatever risks they want. So family offices are already depositing in Aave. They're taking exposure through tokenized interest-bearing positions. They are trading on DEXs and whatnot, right? It's their money. So when it comes to client money, then there are a whole bunch of fiduciary obligations that come into play. And at that point, investment policy restrictions and all sorts of other requirements come into play. And then it's a matter of whether investors are comfortable with the risks that are there or not. So the regulated spectrum is. So we have to cross this chasm, right? We have to cross the chasm from the less regulated end, where early adopter end, to the most to the JP Morgan end, but let's not rush that, right? And so at this point we are in the phase with JP Morgan and others at that deep end of retail regulated, and it's more education, right? So it's education, it's learning from what they need, it's learning, it's upon the DeFi community to educate and then build tools, right? So I think like Johann is building Metamask for institutions, and that's a pretty cool way of saying, look, how do we offer a similar interface to, with a little bit more of a custodial, protections and so on. So there are tools that have to be built around reg reporting, around analytics, around, risk management, around compliance. So all of those things are coming. There will be permission layers, there will be KYC, there'll be all sorts of stuff. But here is the good news. The core of, financial instruments manufacturing or production has been built, and that's what Lex Sokolin calls it, right? So we built the core layer, we built a template. Now we scale. Now we build web scale technologies. Now we build privacy. Now we build security. So all of this other stuff is something that's built on top of this core manufacturing layer or production layer of financial services. And then we have 20 years to go on this, right? But let's just, and this is a huge market. We're looking at trillions and trillions of dollars. So, and it's so early, we have 60 billion. The growth in this space is just absolutely amazing, right? And because we're starting from such a low base. So I think we should all be excited about the opportunity and then manage the risks. And the biggest mistake we can make is worry about risks all day, all night, and then actually not fail to see the opportunity that's there in terms of delivering consumer benefits and consumer protection through this transparent automated technology.
I can very much echo that one. Definitely. Mariana, as an exchange, how do you deal with exactly this kind of pros and cons of moving faster and take a little bit more risk than, we have to make everything super secure and make sure everything is fine? How do you deal with that?
I have to put it into different landscapes, right? The regulated environment where you cannot really move fast and break things, and then the unregulated still environment where you can allow yourself to actually follow the pace that you want. And clearly, especially in Europe and the US, crypto is already heavily regulated. And we are dealing with every single regulator, at least on a European level, coming from marketing perspective, what kind of wording you can use or not. And as you know, we have heavily regulated products like the card, for example, or certain other products that sit on the app. So everything that comes in a regulated environment, unfortunately, comes with the inconvenience of kind of discussing with people why should they provide so much KYC and so much information about themselves, to why is it not okay to just drop $500,000 worth of dollars as a deposit and expect us to not ask any questions. And we understand that sometimes the frustration comes from users who also come with the expectation that this is crypto, right? And I can be free to invest my money no matter how much money I have. I want to provide as little information as possible, and I want to get into that ecosystem. So perhaps in this case, DeFi solutions would actually come really much more useful because it's permissionless, and you don't have to provide personal information. As long as you know how to fund your wallet, you should be good to go and you can participate in the economy. But it has been a real challenge. But I have to say, from a DeFi perspective, for example, what AJIT mentioned, other companies are trying to, let's say, build a lot of trust into certain applications where they would allow institutions to, let's say, provide safeguarding mechanisms for the smart contracts that they're using. Because the biggest fear is that the risk ultimately remains with the bugs and the inconsistencies with smart contracts, and the fact that a smart contract can just lock the funds in and you have no access to it. So from an institutional perspective, if you invest a lot of your money into a smart contract and something like that happens, you would kind of want to have the safeguarding mechanisms that the regulator would guarantee you, or they would guarantee that a provider of services would actually have safeguarding in place. So there are companies like Trustology is one that I can think of that provides certain safeguarding mechanisms, whereas they would audit the smart contracts and they would make sure on your behalf that nothing bad will happen to your money. Or again, speaking of safeguarding mechanisms, because let's not forget that regulations are not there to annoy us. They're actually there to protect investors. And very often it always comes to how do you make sure that you don't lose people's money and that you guarantee the return that they're expecting from you. So from a safeguarding perspective, one of the methodologies in traditional finance is to also insure the funds that you have under custody. So obviously custody does not exist in DeFi, but still the smart contracts own your funds. So naturally, no insurer would actually want to underwrite a DeFi company, right? But there are companies out there who already try to provide insurance products to DeFi companies, and this could also kind of provide more trust into the network. So there are different mechanisms that one can use to ensure that DeFi technologies become ubiquitous, and it's not just, a small wave of early adopters or innovators that will follow the trend.
Absolutely. I guess we are kind of out of time, if I'm not mistaken. So from that perspective, thanks everyone so much for being here, and I hope it was informative for our audience. Thank you.